Greetings, guys and gals. Welcome back. Welcome back. JJ from School of Trade here. Hope you guys had a great Tuesday. Hope you guys are having a great summertime. Boy, that summertime market, always a little bit of a love-hate relationship in the summertime, as I always tell guys and gals in the trade room each morning. Don't try to wish that summer to fly by too fast. It's going to be December 15th before you know it, and we're all going to be freezing our behinds off and be wishing we were back in that wonderful July, August weather. So hope you guys are having a great summer out there. Real quick, want to remind you guys, if you haven't joined the free trial yet, you're missing out on a ton of great free resources and very educational resources. Learn all about my trading strategy, get a special invite to attend our live trade room, and as always, you'll get to learn so much about what we're all about here at the School of Trade. If you're serious about kickstarting your career, check out the free trial. You will not be disappointed. Also want to remind you guys, too, to check out our blog. Our blog has a ton of useful information on it. And while you're on the blog, don't forget to check out the spots here right at the top. All the way at the top there, especially, come out and see us in Las Vegas, Nevada. We get our Members Summit coming right around the corner here, boy. It's going to be here in no time at all. All right. You've heard enough out of me here about our blog and our website. I want to show you guys one of my favorite setups. Now, we teach our students over 10 different trade setups. That's right. We're not just a one-trick pony. I do have some very simple setups, right, that we trade every day. I also have some setups that don't set up every day, but of course, when they do, we are always on the alert. Here was a great example today on the euro. Talked about this trade well ahead of time, and well, let's take a look at it. First of all, I want to go into a little more detail about the setup itself. We call this the inside-out setup. And the inside-out setup is relatively easy. When we leave a trading range and then fail and come back into that trading range, this is always going to be what we call price rejection. And price rejection is a very powerful tool. Because remember, markets are always rotating between overbought and oversold, into supply, into demand. And so when markets break out of a trading range, we know that there is price exploration going on. So today, when the euro broke above its previous high of day at 32.98, now we provide all the indicators to do all this for you guys. And remember, we call every trade we take live in real time so you can follow every single trade that we take in the room. We talked about this trade well ahead of time. And we talked about how we had the previous high of day. We call it the PHOD. Just like at the bottom, that'll be the PLOD. Now, I always think about this the exact same way a market profile trader trades the value area high and the value area low. So imagine for a second, instead of the previous high of day, now think of it as value area high. Instead of the previous low of day, think of it as, you got it, value area low. All right, point of control would be right in the middle, right, of that range. So it's not exactly the same as market profile, but like I always tell our students, I'm a big believer in market profile theory, but I do not believe in the way that a lot of new traders get trained on how to trade it. It's not an indicator, it's not a strategy, it's a way of looking at the market, right, and understanding supply and demand and value. That's why they call it the value area. Well, this, of course, I'm not using the value area on this. I'm using a simple price level. I would rather use highs and lows than the one standard deviation away from the mean, right, for the value area high and value area low. So I like to keep it a little bit simpler than the value area high and value area low. Bottom line, just trying to illustrate for you how I look at this. So first of all, this morning, we don't get a chance for an inside-out setup until we go above the previous high of day. There we go. Just as fast as we go above, we collapse. We call this a two-step pattern. It is two tops and one swing low, and look out below. There is an easy trigger, 8 o'clock Eastern time this morning, right when we got started on the euro. Now, you'll notice that we're going to take a profit target on this in two locations. First, the first target, remember we talked about the point of control? The first target's going to be right in the middle of this area. We're going to look for a specific price level, which I'm unfortunately not going to be able to disclose to you right now, but I would love to give you more information on that as a member of the School of Trades. Come out and join me in training tomorrow, and we'll talk all about it. So the first target will come off right about the middle of that range. Second target, which of course is our home run target, is all the way at the low. Now you might be saying right now, wow, that's really simple, and that's very similar to that market profile 80% rule. Aha, now we're talking. There is an 80% chance that once we go above the previous high of day, if we slip back in, there's an 80% chance we're going all the way to that previous low of day. And that's one of my favorite. I've been trading this setup for over 10 years now, and it's it's not only one of the most consistent, but it's also one of our favorite because as you can see, it's a very easy setup. I'm not using a bunch of fancy indicators. Heck, I don't even need to know how to read tape or how to use any other tools. All I have to do is identify the previous high of day, the previous low of day. The key is I've got to wait for a successful break, and then whoop, it slips and falls. Today was a little bit easier too because the dollar was moving higher and it pushed the euro nice and low. So when you look at this on the chart, guys, at 12.50 per tick, you're talking about a 27 tick to the downside, first target, and a 55 tick here. So just shy of 90 ticks on this, guys. That's over $1,000 on 2 contracts. Even if you just took your 1 contract trade and got off at your first target, you're still making over $500 on that trade. Just a fantastic way to do it. As you can see, no fancy indicators needed. This is all about understanding how these markets work, understanding the value and the price rejection. Because we know that price was in balance, right? We were in balance inside of yesterday's range. We go outside of yesterday's range, exploring new price levels. Price is rejected. And when it's rejected, guys like you and I, we're going to pick up on that, and we're going to sell this baby when it comes back in. As always, guys, don't forget we provide all the templates, all the indicators. I provide you with every single nitty-gritty entry and exit rule you could possibly imagine. We've been doing this for a very long time, and you guys are going to love being a member of the School of Trade. I want to encourage you guys to come out and see us. Don't forget to come out and see us as part of your free trial, or come out and join us in Vegas, November 21st and 22nd. Again, if you haven't taken that free trial yet, you are missing out on some great stuff. We'll see you guys next time. This time again tomorrow? Yeah, we'll plan on seeing you about 24 hours from now. Have a great Tuesday afternoon, and we'll catch you in the trade room tomorrow morning. We open up at 8 a.m. Adios, amigos. Bye-bye for now.